11:07 a.m. Eastern Standard Time on this Saturday, October 5th, 2024. I'm XRP Future Millionaire, and I reside in the great state of Michigan. Rob, welcome in, my friend. I really appreciate you tuning in. I don't expect to see many people here. We got college football that's going to be starting here shortly. It's an early Saturday morning, and you know, I didn't even know I was going to be doing a live, but I figured if I was going to do one, I have to do it now, because I'm watching all the games and I don't know what I'm doing later. But I wanted to come on for one reason: the fact that XRP with this setup, and I know it seems like it'd be bearish right now, but we're on a pattern breakout, a short term, just from the consolidation from when we had the breakdown. It looks like we put in an inverse right arm here. And even in the short term, if we look at it, I mean, if we look at this in the short term, it's starting to look like that could be an inverse head and shoulders playing out here. Now, if it comes down here in the short term, we would invalidate this structure at 52.66. So obviously we have to pay attention to that, but it looks like it's setting up a move to 55. Now, I don't know if it's going to set up that move. And I'm telling you, if you do anything right now, it's very risky. But that is the setup right now, and we'll talk about it. UK Phil, welcome in. CJ2 Pilot, good morning. Thank you both for being in Tom's Army for over 6 months with the XP Predictor. G Wise, good morning to you, friend. Sir Smokeslot, good morning. Thanks for being in Tom's Army for your first month with the emoji badge and me being abducted by aliens. True, welcome in, my friend. I'm so appreciative to see you in here as always. That's a knowledgeable mind right there. Nazir Khan and Crazy Pole, thank you both for being in Tom's Army for your first month with the emoji badge and me being abducted by aliens. George, welcome in, and thanks for being in Tom's Army for your second month with the Dusty's Outhouse Crypto News. Greatly appreciate that. Messi, good morning. Mark Casson, welcome in, and thanks for being in Tom's Army for over 6 months with the XP Predictor. More people than I expected to be in here right now already. This is craziness. G Wise, welcome in. Roll Tide. See, in 2023, we had the upper advantage, but I have a bad feeling if we somehow make the playoff, we're going to get the shit beat out of us by Alabama. So what comes around goes around, and easy come, easy go, as they say. So roll tide indeed. But, you know, from the great state of Michigan, go blue. Oh, I should have my national championship hat on. What am I thinking? Well, you got the gracefulness, and I'm wearing my Florida hat today, so you don't have to put up with that during the live today. But, yeah, I mean, I don't know. But with XRP here, are we going to end up pushing over the top here, or are we not going to be able to do it? That's the question we have to ask ourselves. Is this going to play out true here, or do we just play out to the downside? I would like to think it could break up, but who knows? If it was going to have any bullish chance this weekend, this would be our 5% move here, roughly. This doesn't even... It seems like it's misaligned right now. What is going on here? Hold on, I have to read. This was not set up properly because it had not fallen under as much as it was showing, at least on my chart. Hold on. I think I did it like that. That's the 30. I'm pretty sure that's how I based it. Now I'll be able to tell. Oh yeah, that's right where I had it. And then if it broke out there. See, and it seems like it's almost like, or should we put it like this? I almost feel like that's how I had it, just like that. So I would give it more. Then if we're saying a resistance, see, this is where it gets tricky, because I'll show you. Because if you put it like this, you've got that set, but then if you put it just a little bit down with the trend, it's a tiny bit lower. See, that's where it gets tricky when you start to do this, because you very well, you could have started like this. And no, I'm being serious. You could start like this, and it would be like this. I almost think that would be more appropriate But I don't know. I don't know. I'll keep both of them just in case. So it's either going to bounce. So, I mean, that's how it looks. I would like it to stay on the top side a little more, but kind of looks like it wants to come down here. So, I mean, it would still be, if it invalidates this structure, then it would come down farther. Man, this is an interesting one. So I want to think that the way it's set up, but if it invalidates that structure, we're not going to get a 5% move. That's why I wanted to come live instead of just going on and doing an update and being like, oh, we could get 5% here, yada, yada, yada. Not that I thought we were going to have like hundreds of people in here, because most people have already given up and being on a Saturday morning. But I think there's an opportunity to discuss this. So what do you guys and gals think? Do you think this is going to bounce out of this region? Or do you think this is going to just fall through? I want to know. I really want to know. I'm interested. I'm engaged today. I'm very engaged in the chart right now. So do we think this just comes down, or do we think we can actually make a bounce here? So it'd either be a bounce like that, or if it came down here, your bounce would be like 54.88. So it's just a small differential. Live in Riches has a long in. Excellent. And this looks like, in the short term even, this could be creating a broadening wedge with what's happening right now. Just hear me out. And we'll see if we can catch this in real time. So right here, looks like something like this in the short term. And then now if this holds where it's already come down to and now it pulls back, couldn't it be doing something like this in the consolidation? But it would have to hold that. And then if it broke that, then we would know the next two supports below. But it could be starting that kind of a, if it's that kind of a consolidation, it'd be volatile. That's for sure. But see why it's so hard? Like, how would you just do a leverage trade though? Like, there's a trade set up, but exactly where are you buying it from? You know, that's the problem here. That's the biggest problem, that it always ends up. Because even if this plays out in a spot trade, even if you buy it from now, is there enough potential here? But it does look like it's set up here, short-term inverse head and shoulders. I can't help what I'm seeing. Like, even in the short term, look at this. Boom, boom, boom. Now, if it plays out without invalidating that head, it's got an upward of 55 cents approximately. Huh. GY's nothing lasts forever. No, it doesn't. And yeah, it's typical XRP. We've been trading in this range. I said it's the greatest use case that we could ever have asked for, but most people don't want to acknowledge it. But see how we were in this area, and now we bounced up to the technical breakout point, back tested it here. Now the higher resistance where you can go boom, boom, boom if it holds that. But then if it wants more of a downward slope, boom, boom, come back here after here and here again. I don't really want that downward push. We want to show some kind of upward testicular fortitude here. And if we could show that fortitude, that's how we could get out of here in a quicker fashion. Not saying that we're going to break bullish past here. I'm saying this could be even conceived as a dead cat bounce in this case if it doesn't. But it would be a perfect retest. We dropped 23% from the 66-cent high. We had a swing low of 50.6. So from the 66.4 down to 50.6. And then we have a rebound, you know, of 9%. That's not uncommon from the swing low. After a swing high to the swing low of 23%, an 8 to 9, a 9% rebound is not uncommon. That doesn't even seem like enough. Usually you get about a 13% no, it's close, because 11.5% would be that 50% retracement, and that's typically what you're looking for, unless you have the dead cat bounce of all dead cat that goes 75%. That throws everybody off. So it goes down 23%, comes back up 15, and then everybody's like, holy shit, it went up 15, and then it just drops the head off. So Mark Caston says bounce. Interesting. I like seeing some of the different opinions, because it makes me feel like we're gonna have a bounce here, but you know, what do I know? XRP Ricky Ripple says a live at a great time. I agree. Like I said, I wasn't gonna do a live at all today. I don't think I was gonna take the day off from lives, But then I seen what was going on and the potential on the chart. I'm like, you know, I was going to do an update. And I said, no, I got to do the live. And thank you, XRP Ricky Ripple, for being in Tom's Army for over 6 months with the XRP Predictor. I greatly appreciate that. I really, really do. Really, really do. If you guys appreciate what I do, make sure to hit that like button. It really does help. And make sure you subscribe to the and I can't even believe I'm saying this, 25,100 subscribers. It's insane. As we continue our trek towards 30,000. Unbelievable. Hey Now says we are definitely bouncing, and welcome in, friend. It feels like we're going to bounce. I can't help what I'm seeing. You know, and if that broadening wedge, the way, well, it's not even really a broadening wedge, but the way that, well, I guess it kind of is in the short term. But I think we're perceiving that properly. That's why I was trying to say, if that's actually that, it's not going to get all the way to the bottom. You know, that's the bottom bounce, but we're technically playing on this kind of a pattern. We technically want it to bounce like this, up to that 55.18. And right now, it is starting to have that quick pullback here. You know, we want to see follow through here and then break out of the short-term range. But now understand what we've done here. You got to break past one region now that it created this nonsense. Once it does decide to break out of here, and it could expand. But look at this. Just remember this. Let's say it breaks out somewhere around here. Now we've got a short-term resistance that this short-term consolidation forced us to have to break through to confirm it. But you see how perfect it does this? So you can't make things up. And in technical analysis, if it lines up, it'll make sense. And if it makes sense, you'll see it right in front of you. See that? To get past that formation now, isn't it kind of funny how it lined up at 53.48 when that's exactly where it has to get past to not only break over this. So, and there's your setup. If this is an inverse head and shoulders, you've got to hold this. You have to hold it. I'm actually off. You have to hold it. What is it? Like, fuck. I guess I can't do it today. Well, I can only see out of one eye, so my depth perception's bad. So obviously I'm going to have to get the arrow out because I can't do it. That's a true story, too. I have keratoconus, so I really can only see out of one eye. The left eye's a big blur. So we're going to want to hold this integrity at all costs. Where's this at? Ooh, I think we almost broke. No, see, that's too much. We don't want it to go that far down. I almost think that we want to keep this in. Actually, you know what? That's too far back. Look at this. A better way to look at this, that's my own, not ignorance, but we can make this easier right here and right here. So I'm looking at that kind of like the neckline in the sand. So you really want to hold that structure. See that? You want to hold that. You're trying to look at some kind of structure that's being built. And if that's an inverse setup, we're trying to find where the neckline could be conceived. At least I am. And I know you can go up higher, but I'm looking at this. See this? And then it comes through, and then we got this little piece right here. Looks like that's the true neckline. That might have just been a wick through to throw us off a little bit. That's too far down. So then if it comes through, see how this is really playing the base right here. This is actually, wow. We've got all ends are meeting right here. This is fascinating. And people say technical analysis isn't fun. Pfft. Live in my world. This is so fun. This is the funnest. Because look at that. In a 5-minute perspective, look at all that information we're able to draw out of this. Does that make sense to anybody, or did I just lose my audience? How many people are able to see this? Wow, 77. Wow. Make sure to hit that like button. 47 people have hit that like button out of 81. And on this Saturday, make sure to hit that like button. Make sure to hit that like button. Yes, indeed, Rick. And thank you for tuning in, Rick, and being a very trusted mod here. I love it. Make sure you don't let Rick down. He's asking for that like. Make sure you don't let him down. Papa Wheelie, welcome in, and thanks for being in Tom's Army. I believe it said for your first month with the emoji badge of me being abducted by aliens. I love it. Love it. And I can see a big inverse head and shoulders here. If we can just break out of this short-term death cross, which is a lagging indicator, as we know. I think if this is going to break out, this could have been our liquidity dump that we had, because a lot of people probably would have expected it to jump from 53.27 because of how it rotated right here. But look what it did. That's a quick way to get rid of a lot of leverage trades right there in a short amount of time if somebody was leveraging, especially if they were going high leverage. Look at that. If somebody was doing one of those 100% leverages, they liquidated 50% or 50x leverages. That's about a 40% loss, 50% loss almost. But I'm watching this very closely here. I think there's a lot of information right now that's being shown to us. I really, really do. And if you want more people to see this information, make sure to hit that like button, please, so that YouTube will recommend this, and then we'll pop up in the algorithm. And that means on the news feed, everybody will pop up, or my content will pop up to everybody, whether you've seen my content or not. You know, and it'll pop up here. And the beauty is, even if it's just somebody from the audience, it'll be pushed around it better. And if you're in the audience already, they definitely want to see this now and not on the rerun, because there's no ads during the live. And you can talk in real time. Plus, college football starts in a little bit. No one wants to watch this during college football if they're a fan. Well, I mean, some might. I would. I'd welcome in. Ronnie says, like button activated, and I know exactly. Ooh, I want to see what that finishes. I want to see that. But this looks like a tailor-made setup. It looks like it was meant to trick a lot of people, and I still think as long as this stays intact at 52.62, this is a beautiful setup. I think it's a beautiful setup, but you cannot invalidate that inverse head. It almost looks too perfect that everybody would think it was going to drop, and it's like if you knew anything about technical analysis, it looks like this is where, you know, sometimes I say the technical guru, which is all of us, the technical guru will get paid off because it looks like it's in a bearish moment, but then when you look at the technicals, you're like, wait a minute, that's not bearish. You know, especially in the short term. That's why when I went to 52.80, what did we say? That don't look like it's going down any farther. It can't. You heard me say it can't go down farther than this. Especially with the trading bots know what's happening, but if it goes down farther and it invalidates it, that's also the beauty of technical analysis. We know if it's such a fine line, if it goes below 53.65 on the USDDP chart, that spells disaster. And Bitcoin, somebody said it as well, Bitcoin definitely. I seen this as well, and that's another thing that made me think it. It looks like it's got that same inverse setup. It really does. I mean, look at this. It looks like in Bitcoin, you know, it might come down farther, who knows, because it doesn't have the same outside setup, I suppose. But as long as it doesn't break up the 60 or break down the 61,690, it's got the same setup we're talking about for XRP. Now, I will preface it by saying it's a little harder to decipher this one than XRP because it comes down like this, which means for Bitcoin, actually, that's not right. Hold on. For Bitcoin, it technically, I don't know what it wants to do because XRP is a much tighter gap. Now, would you do it like this for Bitcoin? Like, I don't know. I don't know. And technically, you could say, you know, what about this, Tom? And yeah, I would agree that it could do something like right there, but we're below it. So if it's below it, we have to find where a support structure could be to where it would not invalidate that inverse head. I don't know. I don't prescribe to any of the fancy names like October. That's outside my education. What I always say is the closer the pumpkins get, the more reality there's going to be a market-wide rally. Do you know why? Because of tax purposes. People know whether they're up or down at the end of the year, so they're going to do what we call a wash, which is much easier to do in crypto than in the stock market, because I'll now denominate a W next to you in the stock market, which is a washable asset, which means they know that you just sold it to rebuy it back to claim the loss, so they won't recognize the loss. But if you do it when you're gaining stuff, they'll recognize the gain, which is bullshit. So, but in crypto, it's a lot harder for them to call it a wash because it's crypto. It's not regulated. You don't want regulated crypto. If you get regulated crypto, XRP Future Millionaire is not as interested. I will be for XRP, but not for the rest of crypto. I don't want regulated anything. Give me that unregulated crypto-like casino where I could be had for being a douchebag. Or, I mean, I could be had for not having the proper information. Well, that's on me. I don't need the government to tell me how to trade or when to trade or how much regulation there's going to be. You really think regulation's a good idea? Do you see what they're doing to XRP? Everybody, for everybody who tells me they want regulated crypto, do you appreciate what they're doing to XRP right now? No. Yeah, for Bitcoin, it's not invalidated. What do you mean? That's not invalidated. If anything, it's trying to validate it. But if you're looking at it, that's kind of the way you would have to look at it in the short term, to be like, well, we need to break past that resistance before we lose that support. You know, I'm just trying to give you guys a short-term narrative. But if you want to see the truth about Bitcoin, all you have to do is pull it out. It's a massive cup and handle that we've talked about for a very, very, very long time. That's a huge cup and handle right now that's trying to break out bullish, and if it does, the technical target. And like, I don't like showing it because it seems so outrageous, but when you measure the depth of the cup, the technical target's up near 117,000. So, but it's not been invalidated. In fact, it's actually trying to validate, you know, the uptrend instead of it's actually right now trying to invalidate that big drop we've had. But there's so many levels to this, it's insanity. So I figured, why try to do an update? I could tell a lot more in the live than I could do in an update. If you're looking to trade XRP, I mean, look no further. If you're part of my page, hell, if you're just on YouTube and you don't even want to subscribe to me, but you're like, where do I trade XRP without getting fleeced, heisted, and shisted by fees? Just go to my, click right here, same place as I trade, BITUNIX and HOTCOIN. Very simple, just click on that. It has lowest spot and leverage trading fees. I say lowest spot fees because leverage trading, it's speculative, especially the higher leverage you go. So, but if you want to spot trade too, leverage trade, have your own pickings, great choices around the world. No KYC or VPN, unless you send or receive from a bank account. But I'll be honest with you guys, I send money from BITUNIX all the time off the exchange into my own pocket without having a KYC or VPN. I can't do it on HOTCOIN for some reason to my Cash App. For some reason, they don't accept it. But with BITUNIX I can. I send it right from BITUNIX right to my Cash App. I'll buy Bitcoin, and I send it right to my Cash App, literally. And it cost me a little fee to trade Bitcoin, obviously. But like, I sent $450 today, and I was able to at least put $426 into my pocket. So it cost me $24 because it was Bitcoin. So, and that was from a trade I made yesterday. So, plus I bought a bunch of Halloween decorations, so I figured I would pay for it with my profit, which I do a lot. I like to pay for myself with profit out of crypto. Makes me feel good. And then I just regenerate it. I haven't deposited any money in a crypto exchange since 2021, but I've taken out a shitload of money. That makes me feel the best. That makes me feel the best. No news on the copy trading. I told everybody I didn't think it happened in September. It's already available, just not for me in the USA. Like, they haven't expanded into the USA frontier for some reason. It's supposed to be. They keep telling me, oh, we're almost there, we're almost there. Yeah, well, I'm ready. But, I don't know, guys. As much as I want this to break out, we know how it's going to go, you know, or how it's been going, so pay attention to all of this. Don't think just because we're talking about a 5% move that it's guaranteed. But it definitely, unless it gets invalidated, it's got that inverse head and shoulders set up. So, you know, the fact it's over 53 cents and in the short term looks like it's putting in an inverted hammer candle is nice. Did your stuff come? Yes. Did you put it on? Yes. Julie got stung twice today by a rambunctious son of a bitch yellow jacket. Sounds good. Are you okay? Yeah. It flew into her sweatshirt when me and her mom were at the farmer's market, and we got back and she said her arm was hurting, and she took her shirt off, and we seen it, and then there was a yellow jacket in her shirt, but it didn't have the stinger in her, but it stung her twice. She's a trooper. But you know, she took a little bit of Motrin, but then I also bought her a spray after she put some cortisone on, but a spray that is good for the, you know, the sting and stuff. But she's good. She's good. She's actually taking Tommy with her mom. They're going to go up to the store, to Target, because our son has picture day on Monday. So that'll be real nice. That'll be real nice. And I know she's been wanting to do that with her mom, so I figured I would do a live. Ooh, DGB's up 2.51% on the day. How many of you actually stuck around? 79? That's pretty cool. Oh, the stinger did not go in her. It actually got, thankfully it got stuck in her shirt. The stinger was still stuck in her shirt with the bee. So the bee was stuck in her shirt with the stinger. It got caught. So it never got put in her, thankfully. I looked to make sure, and then we seen the stinger still attached to the bee, to the yellow jacket. The only good thing that thing did was kept the stinger attached to itself. Now, see, I don't mind bees, but yellow jackets, they're useless. They're aggressive. I heard of an old remedy. You put scissors, or I mean a knife, up to it, and you'd like rub the knife back and forth, and it would pull the stinger out. Like, that was an old remedy. My Julie's mom told me that that's what her Mimi and Poppy used to do, because they used to live by beekeepers. So I thought that was pretty interesting. But I don't know, ladies and gentlemen, we're in a volatile moment here. So up, down, left, or right, it's nice to be informed with the charts. And today I put bullish alert on it just because this would be a bullish alert. I was going to say bullish alert unless invalidated, but what fun is that? But if I'm being honest, there could be a short-term invalidation right here at 52.6, but then end up still being validated if it holds down here. That's the bitch part. If you want me to be honest, because, and this is what sucks about it, you can be right and be wrong if you're a leverage trader. Boom, boom. What if it does it like this? So technically you're right. It just doesn't break off of that formation, wasn't ready, and then does that. So either way, it looks like there's some kind of bottoming formation going on here down at 50 point, whatever that is down there. So, but that's what I'm seeing. That's what I'm seeing. That's why I wanted to come on. So anything else anybody wants to add? And if you do appreciate my work, consider joining Tom's Army, sending a YouTube super chat. Hell, you can even send through Cash App, PayPal, or Venmo, as you've seen on that other page. But most importantly, hit that like button and share this. I would love it. I would just love it if everybody just hits that like button, shares it, knocks it out of the park, and go fishing for some new people. You know, and then we can have more people. Ooh, did I just see a donation by Ronnie? Wow, a $10 donation, I think that said. He had a nice long comment that I need to see, so I need to see what he said. Maybe he wants me to cover something, too. I know he likes Velo. I'm pretty sure Ronnie likes Velo. Let's see the XRP Bitcoin pairing for a second. As the XRP market cap comes back, well, as quickly as it came back over 30 billion is as quickly as it gave it back. See why technicals are good too, ladies and gentlemen? Ronnie said, thanks for all you do. The worst thing about XRP is that it loves to fill out triangles all the way to the end, like wringing out a washcloth until the last drop. Good luck to be this. Yeah, you're so right about that. You are so right about that. Now, against Bitcoin, I mean, that doesn't look so good. Maybe I put in a bottom here. That was a mighty big fall. But you see why technicals are good? That 966 broke, and we knew that that was the pivot point. And look what happened when it broke to the bottom side. It got to the top side, volatile spike. Stayed on top of it, volatile spike. Stayed on top of it, volatile spike. Came below. Right? And then we know if it comes below, and it's below right now, it could come all the way to 696. Oh, boy. Holy Toledo. So, but that could not just mean that XRP's not having a rally. That could mean Bitcoin's going very volatilely up. Or XRP fell off a fucking cliff. You know, that's also a possibility. Let's go to the Fear and Greed Index real quick while I still have everybody's attention. Because I got to go in like 10 minutes at the minimum, because I got to do some sports betting. I like to do a team parlay And the 12 o'clock games, which last week I did very well. I bet $100 on college football, and don't gamble, everybody. It's not good for you. But I made $100 in bets last week, and I won $1,200. It was my best bet of the season. I bet 50 and won 816 on one. Oh, I've heard of TALCoin. Not only have I heard it, I love it. I love it. But yesterday I have some, so I always try to get some capital on the Friday night football games when they had them. So I seen an upset with Syracuse. I thought it was a lock, and then the over. It was 55.5. So I just put $50 on it and it paid out $248. And it paid $248. They won in overtime and they scored 85. But so I'm trying to look at a slate of games, but I got to do it when it's close because I don't like to overanalyze. I like to do it right before it starts because then my brain can't think. I always get a gut feeling. I think I've been gifted. I think we all have. I think we're all gifted if we understand the little differences. So right now the fear and greed index is neutral at 49. Ugh. Yesterday I was at 41. See, last month at fear at 29, and then you could have just sold it last week at fear. I mean at greed at 64. That's the best indicator. If you don't know how to trade, just buy in fear and sell in greed. And in neutral, if you haven't bought, you don't really do anything. Oh, you guys going? He's already going to the car? Wow. They are going to Target. Julie, did you bring the card I said? Okay. Yeah. I want you to pick it. Well, you know how he is. He waits for me to go to the car. I had to come over here because he likes me to go to the car with him. Hold on. I'll be right back. I'll be right back. Oh, you want to give me that motor? Oh, what happened? You want to give me that motor? All right, sorry about that. So I just wanted to get him set up. He's set up, and they're going to go to the store now. But yeah, that's basically all I wanted to talk about. I think, unless you guys want to, stick around and watch something with me, it's up to you. You don't have to, but there was something pretty interesting that Mike Maloney talked about, and it was fascinating. Where the hell's he at? Oh. The Fed, he talked about how they were broke. Right here, the 30 seconds to midnight, and I stopped it at a spot that I wanted, if anybody's interested in watching it with me.
Calculated. If you take this, the bank reserves, times the interest rate, you can, and the Federal Reserve.
Guys, listen, if you want to know how broke the U.S. is, this is how long it would take for the U.S. to pay back their debt. Listen, just listen to this.
Are in that trap, but so are you and I. And then, but nobody has calculated, if you take this, the bank reserves, times the interest rate, you can calculate this. It's all based off of Federal Reserve numbers. And so you can calculate the free currency that rains down on banks. You know, as we increase the amount of reserves, QE, it's raining free currency. But then when we raise interest rates, it is a deluge that just falls on those banks of free currency. And you'll see here in the upcoming videos on this, that as this is given to the banks, there's less left over to give to the Treasury, meaning that it's coming out of your pocket because it's not reducing the deficits. So this data starts in 2011. Now, I've got to digress a little bit. In November of 2002, Ben Bernanke gave a speech that really changed the world.
Oh yeah, and by the way, I forgot to finish. If we would have to pay $4 billion every hour. If we paid $4 billion every hour, it would take 4 years to pay off our national debt. Let that sink in. In order for us to pay off what the United States government owes in debt, in credit that they've borrowed, we would have to pay $4 billion an hour for 4 straight years. Now think about your credit card. How long does it take before they take your house? How the fuck? And just think about it that way. If you want to know why it costs so much at the stores, it's not the greedy corporations, folks. Those greedy corporations are why you have a job. Okay? Stop it. Stop being ignorant. $4 billion an hour is what the government owes for 4 straight years to pay off our debt.
It was called deflation.
Absolutely. Robbing Peter to pay Paul.
Here. And in there, he laid out a complete roadmap of all the things that he could do if we have a crisis and we reach what's called the zero bound. If we take interest rates down to zero, you can't take them very negative because people will just take cash out of the bank and put it in a safe. Deflation, making sure it doesn't happen here, was a roadmap to the future. Everything that I did I discovered it in about 2005. But what's interesting is in October, 1 month before this speech, was when I first started buying gold, getting ready for what I saw coming. Because of this speech, I knew what was going to happen in 2008. I was warning people that there was one of the greatest crises in history coming at us, that it was not just going to be a stock market crash like back in 2001, 2002, that it was also going to be a huge real estate crash, a crisis. And that is exactly what happened. So here are the mechanics of it. This is the system used for quantitative easing and regular old open market operations. Quantitative easing is just a name for open market operations.
If you haven't followed Mike Maloney, go to Gold Silver with Mike Maloney on YouTube. It's embarrassing this guy doesn't have over 1 million followers. I'm just calling it like it is. 749,000. When I first started following him, he had less than 100,000. So he's come a long way over the last couple years now, especially. But it's embarrassing that he only has that many. This guy should have 100 million people following him.
Steroids, it's huge. But the Federal Reserve is going to inject currency directly into the economy by purchasing bonds from the primary dealers. There's 18 to 30 of these primary dealers at any given time, and if they buy $1 billion worth of bonds from J.P. Morgan or Bank of America Securities, B of A Securities, at the same time, what they do is they create the currency to pay for those. They type $1 billion of Federal Reserve IOUs into existence and they pay the bank. But this bank, you've got to imagine the bank as though it has, here's the front of the bank, here's the back of the bank. There's a wall in the middle. In the front of the bank, you or I can walk in. We get to use those paper dollars. We get to use bank credit. We can write a check. We can withdraw currency. We can take out a loan, which creates the currency, and then write a check to somebody else. But when that currency is created, that is all bank credit. It wasn't created by the Federal Reserve. The banks actually do create that. It's the vast majority of the currency supply, more than 90% of it. But in this case, the Federal Reserve is buying $1 billion bond, but they can't pay the primary dealer directly because the primary dealer cannot have a checking account at the Federal Reserve. Only the member banks of the Federal Reserve system can have a checking account. And this is where that wall in the bank comes in. You use the front of the bank and the Federal Reserve, the back of the bank, there's all the banks paying each other, borrowing from each other, lending to each other at the end of every day, and they do that through these accounts at the Federal Reserve. But when the Federal Reserve buys that $1 billion worth of bonds, they type $1 billion worth of Fed IOUs, bank reserves, into existence, and they pay the reserve account of that primary dealer's bank with the instructions that if I give you $1 billion of bank reserves, I want you to create $1 billion worth of bank credit. So whenever they do quantitative easing, every dollar creates $2. A dollar of Federal Reserve, of bank reserves, and a dollar of bank IOUs, bank credit, that is credited to the primary dealer's account. And then the primary dealer is happy it got paid for that $1 billion worth of bonds. So that is the mechanics of it. But the point is, this causes all of this currency to build, these bank reserves to build up. There's that wall there. They pile up. In front of that wall, it all gets paid out. And so the primary dealers have it. Then they pay for the bonds that they sold into the market, and it's now in the financial.
I'm going to let you guys answer this. Do you want to finish watching this with me, or should I just end this now? It's up to you. If you want to finish watching this with me, I'd be more than willing to watch the rest of this with you. But if you think I should end it now, I completely understand. It's 11:48, so I definitely, I'm definitely be going in a sec. All right, I will keep going.
Markets causing the when a primary dealer, when Goldman Sachs or J.P. Morgan or B of A Securities, UBS, whichever the primary dealer is, when they get that $1 billion, it goes directly into the financial markets, and it lifts the stock markets and the bond markets. And so that's how the economy was being stimulated directly. And it's the first time in history that they've done this. If you want to learn more about this, and you should, go to ggsr21.com. That's Great Gold and Silver Rush of the 21st Century.com, and click on it. This is free. We don't even ask for an email address. Just go and get it, download it, email it to anybody you want. It's free. Click on online chapters. What you're interested in is chapter 4, Scene of the Crime. So you want to download Silver Rush of the 21st Century.com and click on it. This is free. We don't even ask for an email address. Just go and get it, download it, email it to anybody you want. It's free. Click on online chapters. What you're interested in is chapter 4, Scene of the Crime. So you want to download that, or you can just read it online. Give a man a gun and he can rob a bank, but give a man a bank and he can rob the world. And this is the mechanics of this are all explained in part 2, IOUSA, in anticipation of taxation of the population of the nation. Part 3 shows the $200 billion gift you never intended to give. Well, guess what? And reserves are not required. There's no more required reserves. That $200 billion when I wrote the book is now $500 billion. So let's get back to that animated chart. And now that you understand that these reserves, when they get paid to the banks, hit that brick wall.
Guys, if you're looking for gold and silver too, Mike Maloney has his own. This is his own. Goldsilver.com. Back in the day, he wasn't selling as much incremental amounts of silver and gold. You couldn't buy smaller amounts through him. You had to buy much larger portions, but he's made it for the every man and woman now. So, you know, forward going, I would be buying it from him if I buy more. So that's the bottom line. So I figured you should see that.
That's in the bank, and they just pile up. But to keep them from getting out and causing inflation through other, I don't know all of the processes that go on, but the banks can use these for certain things, and it can cause inflation. So Ben Bernanke decides, well, if we pay them interest on reserves, then it won't leak out. It'll stay in there because it's in the bank's best interest to collect that interest. But that interest is actually coming from you and me, and I'm going to show you that
I should
process.
Be above them. I should be above them.
And the payments to the Treasury, this will start in 2011. But here is the interest being paid to the banks, and it's calculated, like I said, this times this gives you that. It's pretty simple. And you're going to watch this just explode at certain times. So here we go, 2010. We've got QE1, 2, and 3, and then the payments to the Treasury come in, and you can see 15, 16, 17, 18 billion, 20, 22, 24, 25, 26, 27, 28, 29, 30, and then interest rates start going up, 40, 50, 60, 70, 80, 90, 100 billion, 120 billion, 140 billion, and it keeps on going up, and then interest rates fall because of COVID. When the pandemic happened, Jerome Powell panicked, and he created as much as Ben Bernanke had created in QE 1, 2, and 3 in almost no time at all, and it peaked at about $4.2 trillion. But what you see here is, as they were creating all of this, Ben Bernanke created a bunch of it, then reserves start to shrink, which means if it's those reserves times 0.2% interest, it was currency raining on the banks, but it wasn't a deluge yet. But that currency, this currency that went to the banks, did not go to the Treasury. It did not help pay down the deficit. And so you get stuck with the bill. So during this whole time, everything that was here means that going all the way back to 2008, going back to here, I wish I had data before 2008 on the payments to the Treasury, because what you would see is this would be every week, this would have been higher. The difference was stolen by Ben Bernanke and given to the biggest banks on earth. So now we're going to take a look at what happens when the pandemic happened. Interest rates were dropped to zero, so the impact that it was having on us was not that much. But then, with all of this currency, it is now, I believe, down around $3.2 trillion. We'll see at the end of this chart, because this was updated just last month for my appearance at Limitless in Dallas, and at the end of August. And so all of this data was accurate, brought up to date. And when I wrote my book, The Charts in 2002, interest rates were only up like, I don't know where they were, but you'll see in a minute. But they were still fairly low. They had not gone up to 5.25% yet. But in March of 2022, that's where this starts, Powell started raising rates at the fastest pace in history, and here we go. So there, he's raising the rates, 4%, 5%. You can see this explode, 450. Now, this looks like it leveled off. That's just an anomaly in the chart. It didn't. But when you take this over $3 trillion, it's at 3.3, almost 3.4 trillion right now. So when you take this over $3 trillion times 5.4% interest, the amount being paid to the banks it just exploded from 150 billion roughly interest. The amount being paid to the banks it just exploded from 150 billion roughly to where we're up at 483 billion. And if I updated this to today, it would be right about at $500 million, maybe a little more, maybe a little less, but pretty darn close to 500 billion. I'm sorry, not $500 million, $500 billion, 500 billion. And you can see those original payments to the Treasury that you used to be able to see, because the scale of this had to change so drastically, they've gone down to where you can barely even see it because we've changed this scale. But these are the IOUs being written to the Treasury. The Federal Reserve went bankrupt right there.
I wish I could reverse it, but I can't.
And they owe the Treasury almost $200 billion. But what came out of the...
I bought his book. It's a really good deal right now. 51% off. It's the paperback on Amazon. Gets here by the 18th. But it's the great, it's the gold and silver rush of the 21st century. I've already listened to all of his free chapters, so I said, you know what, I better do him some diligence and buy his book. What a dick I've been.
Difference between, if I had this data going back further, you'd see that the difference of the average that was being paid to the Treasury once they started doing these payments in 2008 on this interest on those reserves, that difference is all of this that comes out of this part of the timeline, and it only goes negative in September of 2022. So that's like about here. So this 200 billion is it'd be 480 down to about 280. So everything from there up is stuff that was paid to the banks, but was actually owed to the Treasury. But all of this was owed to the Treasury and paid to the banks instead. And since the Treasury has to issue more U.S. Treasuries to cover these payments that were not made to the Treasury under the Federal Reserve Act, it means that you have to make up the difference in the taxes that you pay in the future. The Treasury has to borrow more currency for the government to get by. So the man that won the Nobel Prize in Economics, has crashed the global economy. We just haven't seen the crash yet. It's still out there in the future, but the Federal Reserve is bankrupt and they're in a trap. And the trap is that they can't borrow. People go, well, how can the Federal Reserve get bankrupt? They can just create currency out of thin air. No, they can't. They cannot create currency out of thin air. That does not happen. It never happens. What they do is they create currency by buying something. And that something that they have to buy, according to the Federal Reserve Act, is U.S. Treasuries and now mortgage-backed securities. But those things pay interest. And when they have those, to buy those, they have to increase the bank reserves. And so every time that they try to raise interest rates back up, this is going to go more and more and more negative. This is a trap that they cannot get out of, that Ben Bernanke set, and I believe that this is a death spiral. I don't see any mathematical way that this can work out. It's something that we're seeing right now, the precursor to the end game. And this little red spike right here is the evidence that the end game has begun. And guess what? The biggest banks on earth are the recipients, all on your dime. I want to thank you for watching.
So thank you everybody for tuning in and finishing watching with Mike Maloney. XRP still right where it's at. Remember what we said when we first started. If this inverse head and shoulders were to play out, let's bring this into the smaller time frame because we did a lot of different stuff in this live. We should be able to break out of the short-term consolidation. If it breaks down below 52.6 cents, it's an invalidation of at least this short term, and it would probably bring us down to about 52.20 area to see if this inverse left arm actually could hold from a lower distance instead of breaking out the short term and coming up, at least topping up here to get a double top. But we'll see what happens. The technical breakout, if it does push out from here, is 55.18 or 54.18 if it does come down to like 56.30, or it's dicey if it comes here. But technically it could bounce off 52.65. So that's all I got, everybody. Have a blessed day, and I'll